Good afternoon. How's everybody doing? This is Craig Modelmog, and it is Friday, October 8th. Is it crazy we're in October? You know how I know it's October? The leaves are falling off my trees. And I actually did a little raking last night, and it actually feels good. It's good. I like it. It's all good. But welcome to this week's episode of Wall Street X's and O's. I will tell you what, for those of you who are joining me for the first time, welcome for starters. This is an uncut and unedited show where I just kind of hop on and we kind of let it rip. We have fun. The whole goal is to really educate you about what's going on from a global and domestic standpoint in the markets, and really talk about the things that aren't getting discussed, with a really high focus on educating you on what's happening and why, because there are whys. It's focusing on not just the particular, but the particulars, plural. It's kind of like a recipe. One ingredient doesn't make the recipe. It's all the things coming together that make something magical. So anyway, welcome. But without further ado here, let's kick things off with our disclosure, because we've got to get that out for compliance purposes. And the content on this presentation is for informational purposes only. None of the information contained constitutes an offer to buy or sell anything. Investments can and will lose money. They are not FDIC and insured. This is not a solicitation to buy or sell any investment. It is not an investment recommendation. Tax advice, accounting advice, legal advice, and whatever else advice that I could come up with. So before I get dry mouth, which I should probably take a drink here before we get going, got my rock chalk. It was late night at the Fog, or late night in the Fog this last week, which all that means for Kansas fans is that basketball season is near. Our football team, they're playing a high school schedule, and it's okay. They're trying. That's all I can say. God bless the new coach. He's got a handful to deal with. But anyway, top 4 things. Usually it's top 3 things, because they say in your brain you can really only remember 3 things at a time. I'm going for 4. I'm going to challenge you all with the top 4 things. We're going to talk about the U.S. major market indices and the ever-growing and louder narrative that is calling for a 10 or even 20% correction. Hello, that's crazy. That's big. Although it's been volatile here the last couple weeks. We're going to talk about that. The tax proposal, where it's at, and where I think we're going to see the meeting in the middle of this political football game. I'm going to hammer on that because we all love paying taxes. I'm going to give you a labor market update and really kind of some thoughts there. And then I'm going to close it out talking about the Great Divide. Oh, yes. I got to get controversial. I got to poke the tigers in the cage on both sides. I have fun with it, and I hope you can have fun with it today. But anyway, let's talk about the markets. There's been lots of talk about a market correction. We're definitely overdue for one, technically speaking, okay, and that is a complete market sell-off. Here's what's interesting. As of the close of business on the 4th, I got this off my Charles Schwab monthly market commentary that I listen to, and Lizanne Saunders, who is their chief investment officer, she probably has a fancier name than that, but that's just kind of what comes to mind. She threw out some really interesting stats here. It was relating to a market correction. It's something that as an advisor I get a lot. You hear it a lot. You read it a lot. It's something on the news. There's some idiot out there pounding the table about a market correction. Think about this for a second. Through October 4th, I think that was Monday. Let me look at a calendar here. It was Monday. 91% of the S&P 500 companies had corrected at least 10% this year, calendar year, with the average of being minus 17. Is that below correction? And correction is defined by a pullback of 10% or more. So the average S&P, 91% had pulled back 17%. If you get to the NASDAQ, okay, heavily laden in tech, obviously. Tech, biotech, it's kind of a techie thing. 90% of the NASDAQ had corrected in excess of 10% with an average decline of what? 38%. That's minus 38. That's a butt kicking, all right? If you go the Russell 2000 is small caps. It contains 2,000 companies. they have also experienced a greater than 10% correction with the average of 34% minus 34. That's big. So here is my argument to all the people out there pounding the table for a correction. It's already happened. Okay? Throw that garbage out of your mind. Let's focus forward. Let's focus on the data. Let's focus on what's happening. Okay? And we're executing some fractal math. Gotta love that. I was talking to my Uncle Dennis this last weekend, who was a math teacher, and we were talking about linear versus fractal. I love this stuff. I just think and love it. So moving on, tax proposal. This is big. This is big. It impacts all of us in some way, shape, or form. I really think this proposal, for the most part, is really going to hit your top wage earners. I think people in the middle of the bottom are probably going to be unfazed, to be candid. So, and I think that's where, again, it's the political football game of meeting in the middle. The football meets in the middle. Here's some thoughts. Individual tax rate, the top one is probably going to go up to 39.6. And which hits a good chunk not a good chunk, it actually hits a small portion of the population, because those are people, making in excess of several $100,000. People making $5 million a year in income have another 3.8% surcharge. So it's 39.6 plus 3.8, that gets you to 44.4, unless my math is ridiculous this day. So that only hits a super, super small percentage of the population. Okay, if you look at cap gains, again, this hits everyone potentially. We're going to see an increase from 20% to 25 is what the cap gains tax is going to look like. Okay, so it's going to be a max of 25 depending on tax bracket, and that is short-term gain also. Keep that in mind. Okay, long-term gain usually is tax bracket. We'll see how that flushes out. But again, target is 25%. If you look at corporate taxes, right now they're at 21%, which this is one I'm really dialed in on as a business owner. That's going to go up to 26.5, but it's for those companies that are really making an excess of a lot of money. So again, that's not going to hit everyone. It's going to be graduated as well. So again, not the end of the world. Is this going to be the stake in the coffin or the nail in the coffin to kill the economy? It will impact it. Corporate America is used to doing this stuff. Okay, my son's a corporate tax CPA for Ernst & Young in Kansas City, and he's in his busy season because they've got October 15 filings that they're working on. So I literally catch him and we talk fantasy football and picking his game of the week, where he just has to pick the winner. And in passing, we get texts and calls when he's driving to get food usually. But he's saying how all of his companies, and he's working on a Fortune 20 company, and several other large corporations. You would know the names of them. They are already planning for 2022 taxes. They are not executing some of their write-offs and deductions this year in anticipation of tax changes next year that will help them next year. And then they're planning for 2023. Corporations don't care. They care, but they don't, because there's always a way to work around it. That's the beauty of our tax code. If you work hard and you pay the money to have the people guide you, you will be able to lower your taxes. That is not criminal. Although there's one party that makes it criminal for not paying taxes. Guess what? All of these people not paying their quote fair share of taxes, number one, they pay most of the taxes. Okay, number one, that's number one. Okay, number two, they are doing the things in the economy. They're buying buildings, they're hiring people, they're doing things, they create and spur economic growth. So don't focus on the BS tax thing about how the rich don't pay their fair share. They do, it just looks different. Okay, again, it's a stunt, and I'm going to shut up before I start cussing and saying bad things. Anyway, another interesting thing, 401ks, if you have more than 10 million in your 401k, which I don't know anyone that does, but there are lots of people that do. It's a lot of private companies that once they go public or whatnot, then they put a bunch of stock in their 401k. If you do it right, that's how you do it. If you have more than 10 million, there's a possibility where they won't let you contribute anymore. And then if it gets to a certain level, they may even make you take it all out, which that could be interesting. But anyway, moving on here. Labor market update. Here's what's fascinating, okay? And I'm going to fast forward and then I'm going to come back. Unemployment numbers have come out, and we've been tracking these week by week for a long time. And you say, Craig, these numbers are boring, and why? Well, it really leads to economic activity. Okay, as economic activity contracts, negatively impacts the economy. As economic spit it out Friday afternoon. As economic activity expands, positive things on the economy. So here's where we're at. Total unemployment benefits has dropped down to 4.173 million people. That's down from over 30. That's big time. Okay. You look at PUA, pandemic unemployment assistance, plus PEUC claims, they dropped to 1.7 million. That's been as high as over 14. If you look at total jobless claims, we're looking at just a hair over 4 million. That's everything combined together. Initial claims for the week were 326,000. 326. I am seeing that correctly. That is also improving, or it's kind of flatlining. Okay, but we're seeing some improvements. Here's my point. If you go out and you survey people, and this leads to my great vibe, but I'm not there yet, so hold back on me. The biggest concern is how this continued COVID pandemic is going to impact the economy. That's the biggest concern out there, regardless of party, regardless of person. Okay. Here's an interesting statistic. If you look at COVID, when COVID numbers rise, consumer confidence drops. When consumer confidence drops, services activities drop. And when services activities drop, service sector employment falls. That is a fact. All right. If you go back to the unemployment numbers are coming down significantly. Okay. You've got people that have sat on a bunch of cash that they've had handed out to them by our government over the last 18 months during this pandemic. They sat on the cash. Savings numbers are as high as they've been in a very, very long time. Okay. In fact, I wonder if I can find that statistic here. I wonder who. Yeah, I'm going to quit singing so you don't all cancel and say, "God, Model Mog is a nut job," and to boot. He sings. I can't find it, so I'm just going to shut it down there. Savings rates are very high because, again, conversations with people. Why aren't unemployment numbers better? Why isn't the labor force getting expanding? Because people still have lots of cash they're sitting on. Well, guess what? This is going to run out. So COVID is down. COVID numbers nationally, I know there are pockets of the United States that it's still challenging. Okay, but all in all, it's down 44% from its high here not too long ago. What I anticipate is you're going to see labor begin to get less constrained and to expand. That's going to promote people doing things, spending. Economic activity is going to grow. Things are going to improve. What I think could hamper that, I think we're going to see people going back to work. The challenge is this supply chain thing. We got all these boats sitting out in the harbor in Long Beach and in LA, and they don't have the manpower to unload them. But the problem is once they're unloaded, they don't have the trucks to get them where they need to go. So we do have a problem. That's going to get fixed eventually. But I look for the economy to come back online. I look for the fourth quarter to see an economic growth reacceleration along with inflation. And I look for small caps, technology, energy are going to be leaders. Okay, watch that. Financials, add that to the packet. So anyway, that's what we need to focus on. All right, closing it out here, the Great Divide. Obviously, it's revolved around COVID. You know, I'm going to poke the tigers here, but here's what's interesting. There's one thing that Americans see in common and that they can all agree on, and I said it earlier, is that COVID-19 remains the major threat to the economy. That is a fact. That's where it ends. Okay, and this is Pew Research Center. They kick out and they do all these national polls. Okay, they are supposed to be reputable. I'm going to assume they are, but in my disclaimer, you know, the information on here may be right, it may be not. I think this is legit. All right, it says when you look at it, it says Democrats are more likely than Republicans to have gotten at least one dose of the vaccine. 86% versus 60%, and to support that, a broad range of public health measures to control the pandemic, including vaccine mandates to fly on an airplane, attend college in person, eat at restaurants, shop at stores. Okay. Here's what else is interesting. Overall, just under 45% of Americans say they worry about catching COVID. That's kind of interesting. It's much lower for white people. It's only 35%. Minorities and ethnics, it rises substantially. If you look at across all demographic groups, the lowest that are vaccinated are white evangelicals. Only 57% are vaccinated, compared to 73% of all Americans. It's interesting. Earlier in the pandemic, African Americans, Hispanics were much less likely to get vaccinated and versus are their white counterparts. At this point, that gap is closing. 70% of African Americans are vaccinated, 72% of white Americans are vaccinated, and 76% of all Hispanics are vaccinated. Top in the list is Asian Americans, and they have 94% vaccinations. I can go on, but I'm not. Here's the deal. Here's what's sad. This pandemic has created a massive division in this country. Okay, politics are part of it, and I'm not going to hold back on saying that. Here's what's sad. People are angry. They're cranky. When you drive around, a lot more road rage, a lot more people flipping each other the bird, cutting each other off, and being rude and not kind. Here is my challenge to everyone that watches this, and that I hope you would challenge the people that you know, family, friends, whomever. You know what? When someone pops off and says something, and here's what I'm going to say. 8 months ago today, I checked into a hospital thinking I was having a stroke. It was all caused by COVID. So don't talk to me about COVID. If I had a nickel for every time someone said something to me about COVID or said something insensitive, rude, not caring, unthoughtful, I'd be freaking rich and I wouldn't be doing this stupid show. Okay? So don't talk to me about this. This hits me hard because I get it all the time from people. I'm going to challenge you with the next time someone says something, A, shut your mouth, and B, say something kind in return. Put a smile on your face and say something kind. The old thing of kill them with kindness, that is legit and it works. Be kind. People are cranky, they're angry, they're unhappy. All sorts of garbage is going on, and you know what? You wonder about division? Neither party is trying to create a sense of people coming together in community. Okay? Around election time, that's the big thing. We're going to draw people together. BS you are. You're going to keep playing your stupid games so you can keep your tail in your stupid chair in public office. It is garbage. You need to ignore those idiots. There are too many of them today. Okay? We need to, if we want things to change, you know where it's going to start? With people like you and me. You know what? Be kind, be caring, and be genuine. If you can do those things, you know what? It's going to make this world a lot better place to be. So, for October 8th, 2021, this is Craig Modelmog for this week's, it's bi-weekly now. I wanted to say weekly, it's bi-weekly, but it's this week, though. I'm going to go with that. It's this week's episode of Wall Street X's and O's. I appreciate you guys joining me. Have a fabulous weekend. I love you guys. And again, be kind, be courteous, and smile. I am out.